Today, we unpack SASSRIA's role, its accountability as a state-owned entity, and why special risk cover is an essential part of building a more resilient South African economy. We're joined by a SASSRIA representative who's going to share some insights for us to delve into. Hi, Muzi, how are you?
Very well, madam. How are you?
I'm good, thank you. So we're going to start here today. For those hearing about SASSRIA for the first time today, what exactly is SASSRIA?
SASSRIA is a catastrophe risk insurer. So we insure all the risks that ordinary insurers do not have an appetite for. So all the risks that really affect the state at a national level. So those are really typically the ones that would bring volatility to the fiscus. So the things that are really big that you wouldn't expect your ordinary insurers to cover. So those are largely related to social risks. So SASSRIA as a company, it covers social risks. So specifically, terrorism is one of those biggest risks. And I'll expand a bit more in respect of how those look like. But as a condition, we cover public disorder as a condition. But then obviously there are defined conditions that explain exactly what that looks like. But broadly, that's what SASSRIA covers.
As a state-owned entity, how does SASSRIA maintain transparency and accountability?
To understand how we are accountable, you need to understand how we are formed. So we are a public entity, first of all. So a registered company that is owned 100% by the state. So we report to National Treasury as the accounting authority. But we also are an insurer, a licensed insurer, just like any other insurer in South Africa. We are licensed. But you would also need to understand that we operate in a monopolistic structure. So we are the only company in South Africa that is able to insure the things that we are able to insure. And that was pretty much by design, because if you go back to 1976, for example, when we had some of the biggest riots that South Africa saw at the time, prior to that, private insurers used to insure what we term today riots and civil unrest. But it was more contained to risks that are limited to people just rioting. There were limitations in terms of political risks that could have been covered. So there were limitations, and 1976 happened. And after 1976, the insurers in South Africa could no longer cover that risk because it was really a very big risk. And the volatility was just so high that any private equity could not be expected to cover that. So the state decided then that they would partner with the private sector, but the state would be the centralized agency that covers all of those risks. So that's how pretty much SASSRIA was formed. So now that you understand how it was formed, then it makes it easier to understand the accountability, because we report to Treasury. There are various acts that have actually founded, that made SASSRIA to be what it is today. We also have the PFMA as well. So things like our financials, integrated reports, it gets published in Parliament for public scrutiny. And again, we do not get a budget. So we're not like I would say, department of the state. We are a company that is accountable to its own revenue. So we generate our own revenue. We don't get a budget, and we need to be sustainable as well. But largely, we are meant to cover the risks that anybody else is not able to cover. So you have the regulator, Prudential Authority, and the FSCA on the market conduct side. And then you also have the state. You also have the public as well. So there are various layers of accountability that SASSRIA has to conform to.
Who needs the SASSRIA cover? Is it businesses only or individuals too?
Well, to understand who needs that, you would also need to understand what is available. So I would say everybody needs SASSRIA, from large corporate, obviously to ensure that large businesses, multinationals, they're able to invest into a country like South Africa. They would need to know that social related risks are covered. So I think that's where it starts at a high level. And obviously there are various layers of cover that are provided there. For an example, at this moment, 500 million is a loss limit for one client. And we're expanding that, adding another layer of another 500 to a billion. So that is just one client, for an example. So it starts at the top, at the macro level. So we have very, very large entities that we cover. But also for the local economy to run, it needs to ensure that it is protected. So that's where you have your ordinary businesses, various types of companies that are operating commercially that obviously contribute towards the state being able to collect taxes. So, and then at the same time, you then have the lower levels where you have individuals as well as small businesses as well. So in a nutshell, we ensure the entire South Africa, and the entire South Africa requires this type of cover. Why is that? It is because it is excluded. This type of cover is excluded from a traditional insurer. So yourselves as an insurer, you cover pretty much material damage, and you cover pretty much everything that a client has as a need, right? But largely their property. But if any of the perils that we cover were to be present at a time of loss, you would not cover that because there's specific exclusion, and there are laws that are governing that prohibit you from insuring clients at that level. So that's when SASSRIA comes in. So in other words, a SASSRIA cover it's important that it gets embedded onto any cover that is required. So it is everybody in South Africa that needs that type of cover.
Many businesses only think about risk after disaster strikes. What structural changes are needed in how South African businesses approach risk planning and resilience?
Well, risk resilience and risk planning goes both ways. It starts at the risk financing level, which is the entities that are actually taking on the risk, to whom the businesses and pretty much the entire South Africa transfers that risk. So, and then the second level is the individual who is actually transferring that risk as well. And often you find that there is a mismatch between the risk transfer as well as their own risk appetite that an individual has to understand at what point do I transfer the risk. So I'll break it down just simply so that it can be understood. So from a business level, every business has a certain amount of funds that it has. It has a certain amount of revenue, certain amount of expenses, and a certain amount of expected returned earnings, right? And obviously, you then look at what are the things that could happen at any given time that could affect the flow of income that comes into the business, which then would prevent the entity from retaining earnings, which then builds its balance sheet over time. So understanding that level of risk is often what businesses don't do very well. And that is why you have entities like brokers, insurers, who can help in structuring that and understanding the risk landscape. So, because if that happens at any time, you need somebody who can bring you back into the same position that you were before so that you do not have to worry about that risk, right? But then at the same time, you have a gap in respect of you do identify that risk and you want to transfer it to somebody else at a premium, right? A premium is just the fraction of the value at risk that you're transferring. So you find that that type of cover is just not easily available, or it is just largely too expensive. So risks that are specialized, like the ones that we cover, like terrorism, I mean, it's a big buzzword, right? Like civil commotion, like riot, for an example, strikes. All of those things are things that can critically damage an entire business. Think of it this way. If you have a business and you have employees who go on strike, and because they are unhappy about something and they burn down your entire structure, entire business. So it's that level of risk that needs to be understood. And most businesses do not know that that would not be covered by their traditional insurers. So it's the understanding of what risk is covered by who and what is the availability of that risk to be transferred. And again, it goes both ways. The insurers largely sometimes would provide that type of cover, but only to a limited extent, leaving public, obviously, gaps. And just briefly, SASSRIA is meant to cover some of those gaps, but at this point, we cover the social risk aspect of that gap. So it's a discussion in its own because it goes really deep. But briefly, that's pretty much what risk planning and risk layering and resilience talks about.
What specific events does SASSRIA cover?
Right. So remember earlier I spoke about public disorder. And this is what confuses most people, even some of those people who fairly have a good understanding of what SASSRIA covers. So public disorder is not a peril. It's not a defined event. It is a condition under which there could be potential damage, right? But they are obviously in insurance, you would know that you have to have your perils or rather your defined events. So your defined events are the specific perils or conditions that you cover that can be specifically identified at the time of the loss. So for us, we have very specific ones. The first one is terrorism. Now, terrorism is a very big buzzword, and it involves people who have, it's largely a smaller group or just an individual that have certain ideologies that they want to carry forward in a particular country, for an example, or want to have certain changes at the regime level, and they would go and threaten the sovereignty of a particular country, for an example, and they would bomb, threaten certain things. So it's largely we don't have that much of a bigger risk in South Africa, but it's something that is currently seems to be increasing in terms of ideological conditions that could give rise to a terrorism act, for example. And then you have riots. So riot is an uprising where civil, I would say citizens of a country have particular dissent, and that level of dissent escalates into, I would say, something that is not legal, which is destruction of property. So when that happens at I would say, localized area, that is what we term a riot, where people get on the street and then they have a dissent, they're very unhappy, and they would destroy property. Now, before I move on to the other two, it is extremely important for education purposes now in South Africa to understand that to protest is a right in South Africa. It's one of the highest rights on land to do. So I hear people saying that, oh, protest is bad, but it's actually not, because we all have a right to protest. But there are certain protocols that need to be followed. You do have to have certain demands. You have to have a memorandum, and you have to go and deliver that and have a discussion about what it is that you're dissenting about, right? However, and it used to be a crime in the past, if you remember, to protest. So protesting was a crime. And you'd remember prior to 1994, it was a criminal offense to do that. And then fast forward 1996, we have the Constitution, which then turns that criminality, although obviously, the law and morals, sometimes there's a blurred line, but it was a crime nonetheless in the apartheid area. Then 1996, it changed and became the highest right on land. When it became the highest right on land, there was no socialization of how to protest responsibly. And people associate, protest with the revolution and all of that. So that's why you see a whole lot of protests turning into violent uprising. And then the third one is strikes. So strikes, it's like a riot, but it is employees that are employed by a particular employer, and they are dissenting about certain conditions, working conditions, or whatever the case may be, and therefore they would then destroy the property of. So when it escalates into violence, then it becomes an insurable event. And then you have civil commotion. Civil commotion is like a riot, right, but much larger scale. An example I can give you is July 2021, when almost the entire country, the entire KZN, and then it escalated into Gauteng as well in some other parts of the country. So that is civil commotion. So it's about the scale, right? And there's a high contingent risk where it escalates really broadly. And it's one of the biggest. I mean, July 2021 was one of those examples. And those are the things really that we cover as SASSRIA.
Beyond paying claims, what role should a special risk institution play in economic recovery and long-term stability?
Oh, yeah. I mean, paying claims is actually the last resort. It's not the most important thing that a special risk insurer needs to do. So in catastrophe literature, there's quite a lot about what needs to be done, and I just break it down just briefly. So the first thing is that, like in our case, we cover, to actually put it straight, we don't just insure the perils I've just mentioned. We insure the behavior of disgruntled individuals. Now, you need to understand what that means, right? Because all the perils that are defined are all stemming from one thing. The core root of what we cover is the behavior of disgruntled individuals. So our duty is to ensure that we understand what that dissent is, right? And we also understand as to how to educate society in order to be able to dissent in a way that is more beneficial to them. And this again is also another discussion. It's almost like I'll say a podcast in itself, because it talks to what are the things that we as a SASSRIA can do and are doing in order to educate society to understand that whenever there's dissent, that who the biggest loser actually is ultimately. You can think of a big entity that has insurance, and if it's destroyed, you could argue that the claims will be paid ultimately. But if we don't understand the root cause of why people dissent, an example would be if there's no electricity in a small town and I live in that small town and I have a shop at the corner and I maybe say sell tires, for an example. I employ people in the same community. If there's no electricity, it's not really my issue, it's the municipality's issue. But you'd find that when there's a protest, my shop is going to get damaged, my tires are going to get looted, my street is going to be, people will be prevented from going to work. But municipalities sitting there, sometimes they don't even know what's happening. So who is the person that the dissent is towards? It is me, and I'm part of the society. I'm the one who's also. So education is just the most important thing, and risk mitigation as well. Having like early warning systems that give us intelligence to understand what is happening where, and then we start engaging. For an example, universities, we're talking to universities, for the students to understand that when a university burns down, they might have cover, but there's 2 years of lost time for those students, especially the really poor students who don't have much, are the ones who suffer the most. So that's the key part of being a catastrophe risk insurer.
How do you measure success beyond financial performance?
Success is social and transformational for us, because our existence is not really just to make profit. That is why we are removed from competition. For an example, we are removed from operating in the space where traditional insurers operate, because by design, if you're a private sector company, profit is why you are in it, right? So that you can be able to grow, also make a difference. So for us, it's slightly different. So for us, we exist to fulfill a mandate. That's the first thing. And one of the biggest mandates that we fulfill is that if you look at the fiscus, right, the budgeting process, the Minister of Finance just recently published a budget speech, and he mentioned that there is only 5 billion rands worth of contingent liability funds that are sitting there. Now, in a country like South Africa, 5 billion rands to look after contingent events that you cannot quantify and you don't know how big they're going to be, which takes both care of social risk and natural catastrophes, is not nearly enough, right? So obviously then success would mean that entities like SASSRIA, that is designed to cover exactly the gaps between what the ex post finance. So ex post means a budget, a fund that you just put aside to wait for something to happen. When you can proactively put mechanisms in place of transferring that risk to other specialists that know how to manage that. So for us, first is to ensure that the risk that could affect the fiscus, we cover those so that there's no volatility in the fiscus. That's the big mandate. The second one is a social one. The South African history is a dire one, and large population of South Africa have always been relatively deprived. So the deprivation of those individuals is largely responsible for them being on the street. So the education component to ensure that the dissent of those individuals is channeled through the correct mechanisms that would make a difference for them than the situation that I explained earlier of the tire shop in the corner, right? And at the same time is to ensure that when we're talking about being responsible for events that are so big that we give confidence to the international markets so that it becomes easier for them to invest in South Africa. So foreign direct investments become one of the critical issues that most people don't even think about, right? Because if you're looking at a geographical area, geopolitics are the biggest thing. So you want to know that if you put your money in a country like this, is it safe? Is at least a big brother that sits there that could be able to ensure that your assets are safe? So that's another one. And then the other one is at the individual's level, that we are advocates for social change, for social risks. We invest a lot in different mechanisms that ensure that at least on a smaller scale, with the influence that we have, we could change the lives of society, for an example. And we are in a process now, we're doing a documentary where we're highlighting that work that we're doing to try and make that change.
What advice would you give township and small business owners about SASSRIA cover?
Yeah, so going back to July 2021, for example, some of the businesses and individuals that were affected did not have cover. In fact, most of them didn't even know about the cover. And some did know about the cover, but they were not really sure as to how and where, So obviously, there's a certain level of education that needs to be passed. But it is extremely important for especially small businesses because they have lower resilience. So the ability to pick up themselves without an additional help should there be a disaster. So the lower you are from being corporate to commercial to small business, the more there's a need for you to cover that. And the good news for small businesses is that the cost of SASSRIA is actually quite small relatively, but obviously it is important for them that they don't just look at SASSRIA for cover. They holistically look at what could happen even if it's outside of the SASSRIA payroll, so that there's a good pairing of a traditional insurance cover as well as SASSRIA being embedded onto that. So because if looking at it only from a SASSRIA perspective might be narrow in terms of risk gaps. So to have a holistic risk management system that covers them, it becomes critically important that we educate more about a holistic cover that at least is proportionally aligned with their risk, I would say.
How does SASSRIA encourage responsible risk management among policyholders?
Yeah, well, it's the higher level I've covered that looks at how they need to calculate the risk that they could, right? But at the same time, I don't think they should look at the cost of risk transfer as a garage purchase, which is what most people think of, right? Because if you think of it, right, a small business that is, say, maybe generating a revenue of, say, 5 million per annum, right? You look at each and every cost that you have to spend, right? And sometimes, should you run through difficult times, you're looking at the cost of insurance as one of those things that you can remove. But the balancing effect of that is that you should ask yourself, what happens if this business burns down? For an example, then everything is lost, right? And then now all of a sudden the cost that you could have incurred becomes something really arbitrary. So it's more understanding the value of why risk transfer is there. And again, if the cost is an issue, there are always ways of readjusting the risk so that at least you take a certain amount of risk yourself. So it goes to risk appetite, assessing yourself as to how much can you afford at least to lose should you run into a problem, rather than insuring yourself comprehensively 100%. You could insure yourself 70% and take the risk of 30%. The question is, would you be able to pick up yourself up should that 30% materialize? And if the answer is yes, so that's how risk management really works as a basic concept.
And lastly, what would you say to someone who declined a SASSRIA cover to save on premiums?
Yeah, it talks to the previous point, doesn't it? Because I think it's the one thing that really totally doesn't make sense. An example, you have a vehicle, right? And you insure your vehicle against your traditional insurance cover, right? Accidents, theft, and all of that. And do you know what the cost of SASSRIA is for a vehicle? You can never guess. It is R2.18 a month. It doesn't matter whether you're driving a Ferrari, you're driving Toyota Taz, you pay R2.18. To save R2.18, right, relative to the value at risk of your car, it entirely doesn't make sense. So my advice would be include the SASSRIA cost. It is value that you're not going to realize in a year or 3 or even 5. Sometimes you could realize the value in 10 years. But if you accumulate the R2.18 a month over time, even if you apply time value of money on that, it's still a very good investment.
Thank you, Muzi, for sharing some insights. We appreciate having you on our Workerslife studios.
Thank you, madam.
If you would like to get covered by Workers Life Insurance, please do not hesitate to visit www.workerslife.co.za. Click on option of Build My Cover and build your cover, tailor-made just for you. If you would like to speak to our specialized consultant, please call us on 0861 520 520. Visit our social media platforms. Find us as Workers Life on Facebook and LinkedIn. Workers Life, protecting your future.